I don't know. Breitbart economist and finance editor John Carney joins us now. John, you paid attention to this hearing. What did the members of Congress miss in the questioning on the Hill today?
So one, I don't think they got anywhere to deciding what actually went wrong with Silicon Valley Bank. You could watch. I watched hours of this hearing, and I didn't get anywhere closer. I'll tell you what went wrong. They had just a very concentrated depositor base that was likely to flee, and they didn't pay any attention to that. I'm not sure they really realized that. I don't think listening to the hearings today, the bank regulators realized how likely having all of your customers in one little group, basically, funded by the even smaller group of venture capitalists, were likely to pull all of their deposits out at once. And the hearing didn't touch on that at all, really. And so I thought that was very disappointing.
Why? And all of this makes me so angry from moment one, because, again, they bailed out all the depositors. Sure. Nobody has to pay the price. They're rich people who had their money in that bank and sophisticated companies. Again, oh, well, my venture capitalist told me I had to keep my money in Silicon Valley Bank. And I've heard all the excuses up, down, and sideways. So they rush in. Every deposit is guaranteed. The FDIC, you take it from here, they won't let Marty Gruenberg and his left-wing cronies won't let the bank be sold the weekend. And so now the FDIC finally arranges a marriage. $20 billion is what it's going to cost the FDIC fund.
They're liberal, progressive enough. The right bank is coming in to buy. John.
Right. Well, I think one of the problems with these hearings is that they're assuming that there's something wrong if the bank fails. This is America. We don't have a system where we don't let banks fail. What we have is a system where we try to minimize the damage to the economy and to the financial system when banks fail. Businesses go out of business all the time. Banks can't declare bankruptcy, but they do get shut down by the FDIC. The way our system is supposed to work is to make it safe for banks to fail, not so that no bank can ever fail. And I didn't hear that at the hearing.
But I think what's interesting is the FDIC and the Fed in this situation are supposed to regulate banks to make sure that if there's risks in the management of the bank, they can address it before the bank fails. And the fact that they stress tested 34 banks and never stress test rising inflation, which is going to give you rising rates, and what kind of bonds do you hold, is idiotic by the regulators.
And actually, the regulations encourage banks to hold these bonds because these are counted as high-quality liquid assets, and so they load up on these bonds. There's not a duration aspect to that, so they load up on the most illiquid form because those have the highest yield. So we're actually pushing banks to do exactly what Silicon Valley Bank did. That should be really the focus of the hearing. And we also allow banks to meet that high-quality liquid asset obligation by putting those in hold-to-maturity buckets, which is crazy because they're saying, we'll never sell this, but it's what we're holding if we need to sell something.
It's insane. I actually had a conversation on the phone about this. I just wanted to alert everybody. The FDIC, since 2008 and the failure of IndyMac, virtually almost every bank that has failed in this country since then, the vast majority has been handled in what's called a purchase and assumption transaction by the FDIC.
Right.
That means that all the uninsured depositors never lost money.
Right.
So nobody, again, you want to talk about breeding moral hazard. FDIC's been doing it.
That's what the bank supervisors are supposed to be doing, is not making sure a bank doesn't go out of business. Any bank can be brought down by a run on the bank, but making sure the bank has sufficient assets to cover the deposits if it does fail, and that the assets are good enough that another person can be brought in, another bank can be brought in to purchase it. They apparently failed on Silicon Valley Bank because there is a huge gap between what they're able to sell the assets for and what the total cost of making the deposits.
But they don't. We haven't seen the cost of it truly on the outside since 2008. And you know why they do it? You know why they hide it? Because they don't want to get blamed for not supervising and handling these banks, or the FDIC handling these banks.
John, those are small things. When you have a huge Democrat donor base in Silicon Valley, you don't care about those little pesky regulation.
Well, the way our system works is actually you have the foxes guarding the hen house. You had the CEO of Silicon Valley Bank on the board of the San Francisco Federal Reserve. So therefore, of course they're going to get treated with kid gloves, and that's what Steve does.
And that's an
Next
insult to
we're going to bring you back again. We're going to talk about the CHIPS Act, which we missed today. Talk about, good, bad, or ugly, what Democrats are doing, what Republicans are doing. Is it a good set of
We're
policies?
going to gang up on you. Is what we're
No,
gonna do.
John's with me on this. Hold on a second.
No.
When he comes back,
You're going to have to wait till I come back to find out where I am.
John Carney, thanks for joining us. Appreciate it. Live and in person. That was great.